In this video, we're going to answer the following question. How do I transfer cash from one source currency account to another currency account? Usually, the need for this arises when we need to transfer some money from a USD bank to a local currency bank. So, for example, we might have some cash in our home country in dollars, and we need to transfer that to our operating company in the country where the asset is located, and this cash needs to be converted to local currency. Now, when we do this transfer, the entity that receives the dollars and then provides the local currency usually converts the amounts at a rate that might differ from the official rate for the day. So we cannot rely on the daily rates for the conversion, and many times we might not know the exact rate that the entity doing the transfer will use. What we do know is how many dollars exited our USD cash account and how many local currency amounts arrived at our local currency bank account. So what we need to do is load an entry that allows us to one, respect the source currency for the account that for the cash account for each case. So we do not want to enter source US dollars into a local currency account, and we do not want to enter local currency into a US dollar denominated account. We need to respect those source denominations. That's the first thing we want. And the second is we want to be able to specify a particular converted amount so that it matches what the entity that does the transfer reports to us through a statement. Okay, so what is the incorrect way to do this? The incorrect way to do this is to do the following. So here I have two entries, one in US dollar and one in local currency. And what we're doing is we're moving cash from this account, which is a US dollar denominated account, into this account, which is a local currency denominated account. So sometimes what I've seen some customers do is they get a US dollar source journal, they move the dollars, say in this case $110,000, from the USD denominated account into the local currency denominated account. So the important thing to note here is that we are using a source US dollar account. So basically what we're doing is we're putting into my local currency denominated account some US dollars, and that is not correct because this account does not have US dollars. So that's the first thing people do, and they enter this non-converting. And then for the local currency, they do the same thing. They use a local currency source journal, and they move the cash from the US dollar denominated account and put it into the local currency denominated account. So what we're doing here is we're removing local currency from this US dollar account and putting it into our local currency account. But this is denominated in dollars, so we're saying that we're removing, denominated in local currency. So it says we're putting a credit entry in local currency to a US dollar denominated account. That is not correct. And this actually has a negative effect in the way in the automated gain loss process that Ideas does, because we're not respecting the source and converted segments, and that distinction is critical for a correct automated calculation of FX gain loss. What is the correct way to do this? The correct way to do this is, first, with the US dollar denominated, US dollar source journal, we will credit the US dollar account and debit a contra cash account or a temp account. So we'll put these $110,000 in a temp account. And then with a local currency source journal, we will remove the local currency amount and put it into our local currency cash account. And as you can see here, we're going to use the amounts as provided by the entity that does the actual transfer. So usually we get, say, we transfer $110,000 and we get an amount in local currency, which is irrespective of the dates exchange rate. It might use a completely different exchange rate, and that amount is what we need to enter here. The important thing is we need to specify the converted amount for both cases, so that the this contra cash account or this temp account clears when we finish the transactions. So basically we'll load this, we'll force a conversion amount for both cases, and when we post everything, what we'll have is, in dollars, we will have removed this amount, 110,000 from this account, and we will have this amount, $110,000, in this account, but it's going to be converted dollars, not source. So here, these converted dollars. So I'm going to remove these decimal places here. So we will have these $110,000 converted in our local currency, and in source we will have our local currency amount in our local currency cash account. Same story for US dollars. We will have a credit for this amount in US dollars, source, and that credit in local currency is not going to be source, as in this case, with this incorrect way to do it. It's going to be converted. So the credit here for local currency is converted. That way we respect the denomination of these accounts. So this is a source US dollar account, and this is a source local currency account. We should never enter source entries in local currency to USD denominated accounts and the other way around. So particularly for cash, right? There might be some accounts that are going to have activity in multiple currencies, as happens with WIP accounts, things of that sort. But when it comes to bank accounts, you don't have mixed currencies in a single account. So you have to respect the source. Okay, so how do we load this? In Spreadsheet Link, we'll simply select the file that we're going to upload. So I'm selecting this file, and I'm going to load first my US dollar. So I'm going to go for the US dollar lines, select the US dollar journal, US dollar source journal, and enter this for period 10. Make sure it's converting, and as you can see here, the important thing is in this converted amount field, I'm specifying the converted amount that the journal, that the system should use for, in this case, for local currency. So let's preview that. So we're saying we're transferring these $110,000, and we are forcing the converted amount to be this, which corresponds to our Excel file, column J. Okay, so that's my US dollar side. As you can see, we're moving from the US dollar account to the temp account. We run that. Okay, that has been created. And now I'm going to do the local currency part. So I select my local currency journal, period 10. Same story, the rest is basically the same except for the range. So I'm going to enter my range here for the local currency entry. Let me check. 6 and 7 are the rows. Preview that. So you see here the convert amount was set to 0. That means I did not check this, so I'm going to check that. And now I have my converted currency amount, but actually that's not the right amount. I forgot to save changes here. Save changes. And now I have 110,000, which is what I'm looking for. 110,000 for the converted amount. I'll run that. Okay, so that has been done. Let me post these entries. General ledger. Alright, so I have posted that. Let's look at the trial balance. Let's look at dollars first. Period 10. Okay, so we're seeing here for dollars total, we moved $110,000 and we received $110,000 converted in our local currency account. And as you can see, for my temp account, I got 0, so it cleared out. Now, for local currency, we should have the same result. Same story. We're removing this amount, local currency, from our dollars account and into our cash account. That's for totals. You see? That's for totals. And you see the temp account also clears out. Now, just to check that the work was done correctly, if I look at my source entry, so let's look at source dollars first. Let's look at source dollars. What do I have in source dollars? I have removed $110,000 out of the USD source and into the temp account. That's right. And what do I have in my converted dollars? Source USD, converted USD, in my converted dollars, I'm moving from the temp account into the local currency denominated account in converted US dollars, right? So that's the correct way to do it. So if I look at my local currency source, so let's look at our source local currency. In source, we're moving out of the temp account into our local currency account this amount, but in source local currency, which corresponds to the denomination of this account. And in converted local currency, we have the other side of the entry. In that way, we complete the cash transfer, and we specify the correct conversion amount, and also we respect the source currency denomination of the chart of accounts. So what that means is we do not put dollars in a bank account that's local currency, and we do not put local currency in a bank account that's US dollars.